You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome to this 500th episode spectacular of the option block. If the opening sounded a little bit retro there, that's because that's the way we started this show way back. The first episode, the sneak peek actually, back on September 26th, 2010, if you can believe it. So 5+ years ago, we started this little thing with this little gem of an idea to go out to some active retail a couple times a week with some options, education, some activity, some strategy, some unusual activity, and all this fun stuff. And here we are 5+ years later, and we're still rolling along, still rocking and rolling here twice a week, bringing you all the latest fun stuff from the world of options. And my name is Mark Longo, of course, from the Options, the newly revamped, still in the process, so hopefully everything continues to work throughout the entirety of the show here. Fingers crossed, listeners. The newly revamped Options Insider Studios here in the Options Mecca of Chicago. And we thought, what better way to jazz things up for our 500th episode than by going live? I can see a bunch of you are already piling into our chat room here on the MixLR. If you haven't found the link there, listeners, check it out over there. They'll put the link out via Twitter and everything else. Just go to Mixlr, MIXLR, and search for Options if you can't find it there. And we have food delivery even in the middle of the show, so all sorts of fun stuff going on. And we thought, what better way also to kick off this 500th episode than with a nice smattering, a round table of guests here on the program. So let's just go in order of guests, starting off with, we have food delivery coming in, listeners. Starting off with, to my left, the greasy meatball himself, Mr. Mark Sebastian. Mark, welcome to this 500th episode spectacular.
Hey! Woo! It's good to be here, Mark. Great to be here. Good to be alive. The world is our oyster.
We're hearing some noise of some background noise here on the live stream. We're going to see if we can get it sorted out. Of course, it works all the time in all the demos until we actually go live. And next to him, an old guest, an old fan, an old friend of the program, back for the 500th episode. Spectacular. He says there's feedback here. We're trying to fix it. Don't worry. Everyone's telling me that here as well. The Viceroy himself, Mr. Alex Jacobson. Alex, welcome back to the program, and tell us what you've been up to since the last time we talked with you.
Well, first of all, Mark, it's so good to be back. I think I used to say on the show this was the most fun thing I do, and I cannot reinforce enough that this was the most fun thing that I did back then. I am currently on a institutional project at the Chicago Stock Exchange, and we are building out, in essence, a institutional block auction ability. And as some of you who follow the exchange community are aware, the Chicago signed a deal to be acquired last week by a Chinese investor group. And what we're going to do is put the Chicago Stock Exchange, which has been a very small player, currently about a half share of all the stock trading that goes on in the United States. And we're working on an institutional program which will hopefully put them back on the map. So I'm out there marketing to some of the biggest institutions and finding an enormous amount of interest. And if we have time, I'll get deeper into it as the as the show goes on. But having a good time.
Glad to hear it, sir. And also joining us on this Roundtable 500th episode spectacular, the man himself. We actually forced him out of scenic and lovely St. Charles to make it down here to the big city, his one trip a year, Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome to the 500th episode spectacular.
Mark, I would not leave the great city of St. Charles for just anything, but for the 500th episode of the Option Block, you got it. Now, with that, on behalf of the people of St. Charles, I do have a gift for you that I wanted to present to you.
I'm a little nervous.
On this 500th episode occasion. Right. This is the Greater St. Charles, Illinois Visitor's Guide, presented to you on behalf of my hometown.
What do you know? They have a hammock museum. They've got a hiking to and from the train museum here. All sorts of exciting things to do.
Now, a few things. I would like to personally extend my invitation to you and all of our listeners to Scarecrow Fest we have coming up in October, as well as River Fest in the summer.
What do you know? 100 things to do in the car while you're driving for an hour and a half to the city of Chicago. That's incredible.
There it is.
What a great guy. What a great guide.
Did you rehearse this?
No. No, we did not. This is called acting, folks. Acting.
Now, a little known fact about St. Charles, until the year 2013, it was recognized as the pickle capital of the world. You may or may not even know that.
Yes,
all these fun nuggets.
And I believe North Halstead's now known as the pickle capital of the world.
There you go.
This is why we have the Greasy Meatball on the program. And to balance out the Greasy Meatball, we have his other half joining us here live via the magic of the internet. Mr. Rock Lobster, can you hear us, sir? Are you there, Mr. Andrew Giovanazzi?
I thought it was my Skype my Skype being on that was making the feedback happen. But I am good. I'm glad the Greasy Meatball could be in to kind of liven the show up, which is what he's so good at doing.
You should see him. He's actually very greasy right now. He's digging into some of the pizza we have here.
Actually, my biggest question is he sitting in Alex's lap or not? That's what I really want to know.
He's as close as he literally could be, listen, to the Viceroy himself. And if you have people in there listening in the chat and they say if there was some feedback, it should be fixed now. Again, we're still working the kinks out of all this stuff, so hopefully going forward we'll have it all down to a smooth science. We do have a few special guests here in the live studio audience. They cannot be named for compliance purposes. I'll just wave to them off of the microphone. Long-time listeners, I can say your name? That's illegally allowed? Okay, we have Mr. John Grigas visiting from the land of Options Express / Schwab. He can't speak on the show legally, listeners, but you longtime listeners will remember his many, many appearances on the program and his love of all things Groupon, which just got acquired. So a little one tear in his eye. Long-term hold there for Mr. Grigas. All right.
So something that I will say now as someone who's worked at Schwab, John now runs the trading desks for the whole Schwab community. Is that correct? Yep. And far and away, there is no more customer-centric group of people than John and the team at OX when I was there. I mean, a lot of former floor people, lots of great experience. The fact that John kind of is the cream at the top of the bottle of milk, and Schwab recognized that and gave them the Schwab trading desks as a testament to the skill and the customer-centric nature. I mean, I'm not on the brokerage side now. I'm back on the exchange side. And one of the conversations we were having before the show started we were talking about firms or exchanges that are really customer-centric. And one of the comment I made is there aren't many of them. There's lots of them that'll say that, but the reality of having a general customer-centric interest is a rarity today. And you know, you see that with exchanges where there's now private feeds that you have to pay for and things of that nature. And I know John is blushing, but far and away the most customer-centric desk that I've ever seen. And I have seen a lot of desks. And I'm now unencumbered by the compliance process.
And might I comment, I have to say that I'm a little disappointed that Schwab didn't think of having John run a commercial where he types Options Express features with his butt. Because I think that, I don't know about you, but I think every lady in the world and half the guys would love to see none other than John Grigas, showing features via the keyboard typed through the tightness that is his hindquarters.
And he's only halfway through his first beer, folks.
And I wonder why Schwab compliance wouldn't let him talk. I like to think, John, that it was your many appearances on this program that have moved you up the ladder since then. But you have indeed been rocketing up the ladder over there. Nice to see you coming back and slumming it with us little guys here on the old show today. Speaking of the old show, let's get on to it. I think we got most of the early snafus there out of the way. Let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. We've done this 500 times now, so you should have some idea of what this segment is about. But for those of you new tuning into the live chat there, a live stream there for the first time, this is indeed the portion of the program where we break down what's moving, what's shaking, what's rocking, what's rolling out there in the day that was out there on the broad street. It's been an interesting week. A lot of seems like the Bulls were back out in force for a while there until today with a bit of a sell-off coming on. We are, of course, recording this on Thursday, February 18th, for all of you playing along there on the old home game. Most of the major indices off about 0.5% or so. S&P off 0.5%, Dow a little bit less, about 0.3. The tech-heavy NASDAQ once again leading the charge to the downside, off over 1%. And even with all this sell-off, all of this downside, good old VIX cash taking a bit of an inhale off, a little over half of a handle, hovering in the low 20 handle. Mr. Viceroy, it has been a long time since you've graced us with your presence here on the Trading Block, so perhaps we'll start with you. I know you've been a busy man doing a lot of things over there in the land of Chai X, but anything catching your eye in today's activity that was worthy of note, sir?
Well, one of the things I used to talk about a lot on the show was one of my favorite stocks, and a significant holding in my immediate family is a little company that's thrown into the tech stock mix called Amazon. And this last earnings period is the first time they've disappointed in a bit, but watching that stock go from 700 back into the 400s, now back up into the 500s, and talking to my friends now on the institutional desks, just seeing a flurry of activity in that, and the stock is, most active, one of the most active options every day, and looks like it's going back up to the $600-700 area. So that's one of the things I've been watching as an observer as of late.
Yeah, as I watched the market today, it was an interesting day. They did everything they could to absolutely crush vol today. We noticed that at Option Pit, the VIX went back into a contangoed formation where the cash is below the March contract, which is below April. And then toward the end of the day, we gave away like 3 handles or something like that. VIX went from down about $1 to down 50 cents, and a bunch of people, myself included, scrambled to cover their short premium. And as I look at where things are formed, and I'm not a technical guy, but my tech people tell me that we were right at the top end of a Fibonacci, a fib. And one of the things that's actually been astounding me, I've never been a technical person, but throughout this kind of whole sell-off, maybe because people really didn't have anything else to really rely on because information was so muddled and confusing, technical levels actually seem to actually matter in this one, especially once the market kind of broke out of its previous range. So feels like we're a little toppy, and I would be a near-term seller of equities with my belief that things are going to go a little lower, truth be told. The fund I manage is short an itty-bitty bit of SPX, just a tiny bit, a crumb to a mouse, if you will, amount. But I do feel like maybe we got a little ahead of ourselves on that rally, and we're due for a dip back to the 18 handle range in the S&P 500.
We were up 900 Dow points in 3 days.
Yeah, that's
3 or 4 days.
We've had the
nice
biggest move of the
yeah.
year this year. Last 3 days.
That's a nice year most years.
Yeah. And Uncle Mike, same question for you. I know you've been watching a lot of the shiny stuff, some of the crude, a little bit of S&Ps, maybe a little bit of the fruit company as well. What, amidst all of the sea of rally of late and today's sell-off, really caught your eye?
Well, the fruit company predominantly with what's going on with the FBI trying to get Apple to help them in releasing people's phone records of the murder that happened. For one, there's that struggle that's going on with the fruit company. You also have the Apple Pay going live in China today, so that's another thing that's of interest. And the fruit company is one where there's a lot going on, but what's interesting about it is that it's down $1.86 on the day today. So I'm not convinced that it's really the ideal stock at this point, like it once was, I think, but I do still think it's a good holding to have because of the fact that they still do make a lot of money. They have a lot of cash. But once again, until the iCar takes off or the next innovation thing that they have, it's not going to become the all-time biggest stock.
It's an income
exactly.
stock. It's
That's
not
what
a
it
growth
is.
stock anymore. It's got a good dividend. It's the classic. It's gone from own calls or be long and strong to sell puts.
I would agree with you on that.
It is a put seller's stock instead of a call buyer's stock.
Believe me, I want to argue with you and I want to come back, but I just can't. I just can't.
So if you're looking for growth, you buy Facebook. If you're looking to collect the dividend and collect put premium and then take delivery and sell calls against it, then Apple's your game now.
I think it's the modern day Microsoft is what it's becoming.
Microsoft, and Microsoft is now more like the old Apple.
It's the modern
kind of what it is.
Yeah.
It's been a role reversal. Interesting piece. The last quarter, Microsoft had more revenue from Surfaces than Apple did from iPads. Now, the Surface has a ticket about 3 times the size of an iPad, so iPad way oversold. But the Surface is doing to the iPad what the IBM compatible did to the Apple II.
That's what we've been saying on the show for a long time. Stealth things like the Surface have kind of been popping up, and what a strange change.
It's because of the NFL.
What a strange change from like 5+ years ago, where Mike was kind of the diehard Apple defender, and we would all kind of gang up on you just for fun, and now here we are 5+ years later, and even you, sir, cannot muster defense of it. It's kind of hard,
Gregorius hasn't been in the studio and been on the show in a while. You should see the reaction of his face with me now. It's just freaking him out.
And we have someone else who wants to chime in. He's been waiting patiently and agreeing or disagreeing with me in the chat about various things being said. Mr. Rock Lobster, sir, what caught your eye in today's activity?
I think we're on a inflection. So we're either going to see new lower vol, or it's going to be jumping back up again. Are we going to see the 20? Are we going to get back to that 20 level? That's or the sub 20. We touched it a week ago or so ago. Then everybody was freaking out about Deutsche Bank, and that's what my next thought is that are we finally going to leave some of this volatility behind? So I think we're kind of at that point where we don't get any action out of the market. We're going to see sub 20 volatility, in a couple of days. There you go.
And that's been the big talk. And what's been the big talk today in the option pit chat room today? Is it just VIX coming off, or people still looking at some earnings? Are some earnings popping off this week? Not kind of on the tail end of it there, but still some interesting stuff. So anything really catching their eye out there in the land of the crazy pit chatters?
The crazy pit chatters weren't too crazy today, although everybody's making fun. We did bring Twitter up in the fact that there was some insider buying that was disclosed, and the stock was up $1 when most of the NASDAQ was down. So after getting knocked in the head from 30 to 14 bucks, it made a little bit of a move. So I still think the premium there is not very expensive. So that's my unofficial position.
Well, speaking of official positions, it's been our official position on this show for quite a while that there are probably 1 or 2 or maybe 10 too many options exchanges out there. Well, if you're on that side of the debate, we had another edition, something else to get you irate this week. Number 14 opened its doors, or should I say turned on its servers this week. This would be ISE Mercury. So if you're paying attention over there at home, listeners, that would be ISE Regular, I guess ISE Main, then ISE Gemini, and now ISE Mercury. It's been a long path for this one. They've kind of been fighting with the SEC for about a year and a half. It finally went live on Tuesday of this week due to the holiday.
What is the alleged value added of ISE Mercury?
You know, all
Mercury options.
Yeah. When you talk,
it has no atmosphere, just like Mercury.
That's exactly what it is. It's all a big ball of gas. But no, essentially all these exchanges like to have different models. They all, when you talk to them about it, they all kind of complain about having to do it too. They say they don't want to do it, but of course, they still doesn't stop them from doing it. The SEC doesn't allow them to effectively charge different prices, different fees, et cetera, for the same underlying, same asset. So they have to have multiple exchanges where they can do one, they can do a maker-taker, one they can do taker-maker or whatever, all that kind of fun stuff. Alex, this is your old stomping ground over there. You've been around the business for a while. You worked at a few exchanges, including ISE, so you probably have some knowledge of their issues and the struggle they've had to launch new venues. What's your take now? Here we are. We're past a dozen. We hit a baker's dozen for a brief period of about a month and a half there with Bats EdgeX, I believe it's called. Now we're at number 14. 14 listed options exchanges, Mr. Viceroy. When will it end?
Well, your observation is correct. These are essentially, in my view, ways to game the business model. And to your point, maker-taker is where the liquidity is provided, because the liquidity providers get run over in a pro rata market. They get run over by the dark pools, and they get run over by the high frequency guys. And you will hear from market making firms, those few that are left, you will hear from market making firms that in a pro rata environment, ISE traditional, the original exchange, I'm 5 up. In a maker taker environment, I'm 500 up because I'm getting paid to provide liquidity. And so the challenge is they're all gaming the models. And the problem with 14 destinations, I know John can't chime in, but his life has become a nightmare now with trade throughs and things of that nature, especially on active days. But it's back to what I was saying before, and I hate to get, my first time back on the show in a long time, but I hate to get back on the soapbox, but it's this issue of being client-centric, and the exchanges aren't client-centric. They're centric to their own bottom lines, and that's why you see these multiple platforms.
And they're volume-centric too, which is silliness. And they allow for, all of this fee arbitrage gaming that goes on in the options. And really, the fact that multiple platforms of payment for order flow are allowed, I think is really detrimental to the customer. As great as you do get that big liquidity on maker-taker, Alex, one of the big problems that you'll see with small customer flow, we'll just use an unnamed brokerage platform that routes their all of their paper to a poor hedge fund that doesn't make any money called Citadel. And if Citadel doesn't want to, who's paying for all this flow, doesn't want to market, doesn't want to take down the order, you know what they do? They post it out on a maker-taker exchange, and then you get way bigger slippage.
Well, to your point, I agree with everything you're saying. I think maker-taker is a cancer. And
I concur.
I worked for an exchange that supported maker-taker. The industry is evolving again. I mean, the industry evolved in the first multiple list battle. It evolved in 2000 with the IC going all electronic and things going multiple. And I think it's evolving again. And I would be willing to bet in 3, 5, 7 years up the road, you're not going to have 14 exchanges. You're probably going to have a handful. Because like most businesses, you had people coming in because they perceived, quote unquote, excess profits, and that's going away. And it is not a customer-centric environment. And if you look at when I left the ISE, they were about a 30 share. Today, they're about a 15 share. The CBOE today is a licensing exchange. Its focus is VIX and SPX. And heaven help them if some of these SEC initiatives about ETNs and volatility products come to pass. It's like when I was at CBOE, and the entire exchange was the OEX. It was the OEX, and we were going to move equities up to the 6th floor, and we were going to make the OEX pit bigger. And I don't know if the OEX trades a 10 lot today.
No, you know how many guys, so they moved the OEX actually into my old crowd, which is 4-3. and there are 2 market makers and 1 DPM.
Where's that?
And the
Where's 4-3?
4-3 is where General Motors used
I can't
to be.
believe you know your number. I never knew my number.
It's
I knew where to go. I didn't
it's
know
where
the
General
number.
Motors was. You know where back in the day RCS was. Sheehan was over on the south side of the exchange wall over there. But yeah, there's 2 guys there, and now there's the SPX pit, which was super crowded in 2003, is still super crowded, and there's still a bunch of VIX guys. But if you look around, there are more exchanges than there are large market making firms now.
Here,
They've wiped up. They've literally made it so capital intensive to make markets that there are really 8-9 serious market makers that can trade now outside of like the little bitty locals in SPX or in the futures options.
Yeah, and what happens if Citadel decides it's not a profitable? I mean, Goldman just decided it's not a profitable business, and they left. And saying Spear Leads, Goldman Hull is no longer in that business tells you that a shakeout is beginning. And you talk to,
or it says that Citadel's cleaning their clock,
or they're getting run over by Citadel, or there are regulatory issues with the fact that Goldman's a bank and is subject to Dodd-Frank stuff that Citadel isn't subject to. But all of that comes back to pointing out the inefficiencies and the gaming of having all these multiple marketplaces, and it's stupid. I mean, it's stupid. It's just dumb. It's made customers' lives. Has it made customers' lives any better? So the Spider is liquid, and I can do 10,000 of them and do them a penny wide. I could do that with 3 exchanges. Mm-hmm. Now try to go buy more than 10 contracts in something 15th or 16th most. Here, at CHX a couple of weeks back, we were doing for us a phenomenal amount of General Electric, because General Electric was in the ARB business. They were spinning off divisions, and CHX, which is normally about a half share, was doing a 3 and 4 share. And you say to yourself, well, I know something's going on when CHX is doing a 3 or 4 share, because we're the destination for option market makers to try to get their stock done. Bats Exchange, which has come online, in the last couple of years, and EdgeX too, which was originally an ISE exchange that we bought from Goldman way back when. Bats Exchange is about to come public. They're doing probably an 8 or 10 share in options. In stock, some days they're the biggest destination in some days. But let me caveat that by saying it's kind of like the Republican primary. 30% wins, but that still means 70% is trading away. And the thing is, I don't think Bats is making a nickel. And they're going to IPO, and,
You think they're going to IPO on their own exchange again?
Well, hopefully. Listen,
nothing makes me happier than bad things happening to those guys.
They're good guys, and I hope it does well for them. The guy who runs the option business there, I worked with at the ISE. And I generally wish them the best, but you don't need these many destinations. I mean, most of us grew up in a business where there was the NYSE and NASDAQ, and the regionals all existed for some economic reason. And the old Midwest, which is the Chicago, existed so that CBOE market makers had a place to do stock. The Cincinnati existed, God forbid I mention this name, because of Bernie Madoff, right? He was the Cincinnati Exchange. I never understood what the Boston did. I understand what the Boston Options Exchange does. But you've got, I don't know, with dark pools now, you probably have 30 destinations you can send stock to. And given that most of them are dark and there's so much gaming of the high frequency and spoof, there's a law now that says you can't spoof. Right, I agree it's a good idea, but market makers in this city will tell you they made a living off putting a quote up and then trading around it. And the fact that there's so much gaming going on,
and that's because of all the exchanges.
Yeah,
it is.
The SEC, boy, I could not say this a year ago. The SEC never admits a mistake. It never takes anything back. and they are visibly open about the things they would like to undo. But they don't have the courage to do it. And they're sitting around in Washington waiting to see who the next president is. And, you know, again, I don't want to do politics. I've already mentioned the Republican debate. But, you know, Washington is Wall Street is not it's not a popular place in Washington right now. And depending on how this election goes, Wall Street could evolve again. And I think that evolution essentially is going to take out a handful of options exchanges. I don't know if it'll be 2 years, 3 years, 5 years. And I suspect it will take out a dozen or more stock destinations. And dark pools, tell me something good about dark pools. I mean, Credit Suisse and Barclays just got fined $150 million. And, you know, everybody looks at that and says, well, they're making so much money in the dark pools that they probably don't care. That's a crime if it's true. That's a crime if it's true. Because they're making that much money in the dark pools. Who's paying for it? It's the end user community. In 2013,
it's the pickoff. It's the pickoff boys.
Right, right. It's
the high frequency people.
Is my machine faster than yours?
Yes.
And am I an exchange that sells a private feed to somebody who co-locates with me? And how does that help a customer? Right? It doesn't. It doesn't. If anything, it picks a customer's pocket.
I knew if I wound Alex up on this, it would be a good one.
He
to
does
go.
not have the compliance shackles on any longer.
Let me just
Alex is unchained.
You know,
Unchained.
one of the reasons why I really enjoy working with a high touch desk as a trader is I have control over my order. It's not left out in some electronic hitherland where Ken Griffin's going to make a bunch of money off of me. You know, just to this point, all right, and I know I've said this on VolViews, but the great state of Illinois is what, almost 200 years old now, correct? Getting close on 200. Some great companies have been founded here, right? The Chicago Mercantile Exchange, CBOE, Caterpillar, John Deere, Hyatt.
The Chicago Stock Exchange?
The Chicago Stock Exchange.
The Option Pit.
Yeah.
RCM.
The Option Pit. RCM. Options Express. Some amazing companies have been founded here, right? The richest man in the state of Illinois is Ken Griffin of Citadel, who makes $100 million a month. Yeah. If you can afford Katy Perry to sing at your anniversary and then dump your wife the next week, you are doing fine. All right. So the idea that there's not a serious game going on with what's going on, then is laughable. And the SEC, the problem with the SEC is they don't have like a trading liaison to help educate all the lawyers and regulators on how this stuff works.
They don't admit mistakes.
Yeah.
They can't simply go back and say, we want to reconsider it. And get this, in Springfield right now is a financial transactions tax, right? It's being kicked around. Guess what? You pass a financial transactions tax in the state, CME leaves, SIBO leaves, Chi-X leaves. I mean,
Option Pit leaves.
Well, now wait a minute. That could be a devastating.
It would gut the community here. Option Insider. We're all living in Indianapolis. Now, granted, we get in early. The cost of living will be nice, but that's the CME has backup plans to move to either Houston or Indianapolis if Illinois tries to do something like this. I think everybody knows that they'd kind of like to move their headquarters to either Indiana or Texas if they could.
Look, I worked at Schwab, and John can shake his head, but he can't talk. But Schwab was in the process of pretty much vacating San Francisco. They were going from having San Francisco as their headquarters with maybe 700-800 people, and don't hold me to that number. They were moving most of those people to Austin, Texas. Why move to Austin, Texas? Okay, I will tell you a story about a fund manager I used to call on, whose name is on a building called the University of Chicago. And
wait, you dealt with Mr. Chicago?
I dealt with Mr. Chicago.
My name is University of Chicago.
Joe
Good to meet
Chicago.
you. Have you seen my hedge fund?
So I used to call on Dimensional Fund Advisors out in Santa Monica. And I was told when they moved the company from Santa Monica to Austin, they saved $60 million. And that didn't include the state income taxes of the senior executives. And you know how much other staff moved? Their call center, their portfolio managers. I was told that everybody moved except one person whose wife had a very high-paying job. But they went lock, stock, and barrel out of California. And you're going to see that here in Chicago. I mean, it's already a political topic here. You know, everybody talks about the fact that Boeing moved to Chicago. And it's terrific that's Boeing here. They got the name on the building, but they're not building airplanes in Illinois. They might have a couple hundred senior executives working here, right? But Boeing Field is still out there in Seattle, and they're building planes in St. Louis. And, you know, this city, this state has got to take a hard look at this stuff.
Well, I think there are a lot of the big old states that need to. New York needs to. California is in danger. You know, if Silicon Valley starts to slow down, look out. And, you know, the question is, does Texas get caught up in the same trap that, you know, because not like New York and Illinois started out that way. You know, it took them 100 years to figure out how to completely screw up their economy. And the question is, does Texas get caught in that trap? And you know, who knows? But you know, aside from those type of things, I think that you know, one thing I think we drag away from this whole discussion is that regulation in our industry is important, but seems currently to be a little misaligned and maybe misdirected and not maybe honed in the right direction and angled where it needs to be. And you know, if the SEC really decided that they wanted to make a lot of money doing fines, there'd be smarter ways to figure out how to do it, and they could probably do customers a big service by rejiggering where they find fraud.
Yeah,
Let's
they
just put
don't.
it that way.
To your point, they don't keep the fines. The fines, you wish they kept the fines, because then they could use the money for enforcement. But Wall Street doesn't have a lot of friends now. Wall Street and LaSalle Street don't have a lot of friends in Washington, and you know,
it's kind of like when all the toys think Woody, you know, murdered Buzz Lightyear. You know, you know, you got a friend in me? No, you don't.
You know,
you don't.
You heard this in the last debate. Talk of
I caught it, Mark.
All right, thank you, thank you. I think anybody that has a child age 2 to now 14 probably caught that, right?
I'm 63 and I know it.
All right, there you go.
You're making the Rock Lobster tear up. But since before we get too far down the rabbit hole of fun stuff, let me bring it back to the exchange thing real quick. We also, sounds like we have a bit of a unanimity of opinion on this, that 14, probably a bit too much. We thought we'd take the step of actually polling our listeners, our audience as well. We asked them how many exchanges, the perennial question that comes up whenever a new one launches, how many exchanges do we need? We gave them 4 different options. We said, hey, 14 is perfect. Only 5% said that, agreed with that. I said the more the merrier. Nice 30%. I think maybe some of the exchange execs out there in the audience choosing that one. And a whopping 60.
All the GED people click that.
There you go. Insulting our audience yet again. A whopping 60% coming in on the make it stop option. So there we go. 60% pretty much saying we've gone this far and no farther. And perhaps hopefully
I put
peel
that
it back.
same tweet out on my feed. And my wife didn't read the whole question and just clicked make it stop over and over again.
I think she says that to you probably.
And that may have been a problem.
She was all over the make it stop. Huh? Well, that said, we could probably go down that rabbit hole for a while, but I want to make sure we keep on rolling with some other elements of the show. So let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to The Odd Block. This is indeed the portion of the show where we break down what's moving, what was catching our eye, what was kind of raising the hairs on the back of our neck today, and some of the interesting paper going up out there on the old street. We're going to kick things off in the land of the usually staid Buffett favorite Coca-Cola. Ticker symbol, of course, KO, closing today $43.61, up about a dime, a little more than a dime or so. So it wasn't a big underlying move that caught our eye today, yet there was a lot of paper going up. This name averages a little under 30,000 contracts a day, doing over 65,000 today. So a lot of paper lighting it up. In particular, what looks like maybe a little bit of a roll out here in the Feb out to the April expiration cycle. What caught our eye starting off just a tick under 10,000, 9,700 of the Feb 4300s going up. Looks like paper buying against about 9,700 of the 844s going up. Paper selling, doing that whole spread. 55 cents on the 43s in Feb, 61 cents on the 844s. They added a few more to the tune to a total of about 17,000 on the Feb 43s, and a total out there in the APE expiration cycle of about a little under 15,000. Now, there's size open interest on both of these strikes. In particular, out there in the Feb cycle, there's about 26,000 contracts open there against about 40,000 plus open on the April strike. So a lot of paper here, but the initial first blush, and that was kind of our first thought here, is that looks like paper was perhaps short the Febs, and now with the stock well through that strike, deciding to roll up a little bit farther out and a little bit farther up the strike chain as well. Mr. Greasy Meatball, this one first landed on your radar today. Was that your takeaway as well, even though the size open interest on both, that it seems like it's a close and a reestablishing on a little bit farther out, a little bit farther up?
Yeah, it seems like a classic kind of income play.
That seems to be the way. Of course, we are enjoying some fine pizza and beverages here in the room, listeners, which is why you might hear some chomping going on in the background. You could tell there, Mr. Rock Lobster. Are you jealous yet, Mr. Rock Lobster? I am abstaining since I do have to host the show. But you and I will have solidarity with your suffering there, Andrew. I'm sure no fine pizza and adult beverages flowing out there in the main studio, home of the ice ring. Not a one, just a nice glass of water. And
well, a Maine pizza is just a lobster dipped in ketchup.
I'm going to be waiting to say that one.
No.
That's brutal. Actually, there's some fishermen are gonna come out after you. They're tough. Lobster fishermen, don't mess with them.
All right.
Anything catching your eye out in this Coke, Mr. Rock Lobster, before we move on to our next victim here?
Just what people will go to for yield. They'll take the 1% over any growth, any capital appreciation. That's it. They're like, okay, I'll take my 1% for April and be happy. So they're not looking for a whole lot of upside. That's, I think, the most interesting aspect of that role.
You always have a Coke transaction around traders because they can misinterpret.
I can see Tosaw's eyes lighting up right there as we spoke about it.
Compliance, get me out of here.
This is why Grigas can't speak today. He doesn't want to be party to this madness. Before we keep rolling with the madness, let's move on to our next name here. We, of course, have another, talking about upside call rolls and stayed names. We have a similar trade playing out here as well. This time moving on to the land of Time Warner Inc., ticker symbol TWX, closing today. Another one pretty much unched on the day, about 64 or 62 or so. This is the name that does about 14,000 contracts a day, doing nearly 34,000 of that. And of that 34,000, a sizable chunk going up in this one March 8th 75 call spread. It caught our eye, going up pretty much 15,000 and some change today. Paper selling the March for about 17 cents, then coming in and scooping some more of the April 75. So not messing with the strike at all, keeping it on the 75 strike, but just rolling it out a little bit farther out, paying 54 cents for the April, doing that, like we said, about 15,000 times. Open interest on the March is about 34,000 contracts, so some size open there. It's the biggest strike open out there in the March cycle. And as for the Ape, it's about 25,000 as well, so both pretty meaty strikes. Again, this one, perhaps even, we didn't see any stock going up with this or anything else along those lines. It appears to be what it looks like on the surface, Mr. Greasy Meatball. just a straight up getting yourself a little bit more time here on good old TWX. Was that your takeaway as well, sir?
Yeah, I mean, I assume so, although based on the open interest, it could have been a close. I could have been somebody that was, short the time spread when, because TWX was not that far from 75 just a couple of weeks ago. It could have been a short time spread around some of the deal merger talks around them that somebody decided to close up shop on. So based on the open interest, my guess was that was what was going on, but it can be very difficult until the following day to figure out exactly what the customer was doing, unless you're the broker talking directly to the customer, and I was not.
You were busy rolling your 10 lots out there in SPX.
Did this go up on BATS 2?
In DPM 7 or out there, whatever it was.
Although I wanted to throw out one more comment via the BATS exchange. I think that they should instead of calling the exchange BATS 2, they should call it the Azrael exchange.
I forgot to tell you this episode brought to you by BATS.
Now,
and Citadel.
any comic book fans get that? Anybody?
Azrael, the cat from Smurfs?
No, Azrael was the guy who took over for Batman when he had his back broken by Bane.
Oh, good grief! Wow, that's pretty deep, even for me, sir.
Remember Bane? He was in the third Batman with Christian Bale as well.
Ah, yes, the memorable one. Let's move on here to our final victim here.
The Dark Knight Rises.
Good old, probably the most forgettable.
the worst of the three.
Yes, definitely the Return of the Jedi of the of that serial trilogy.
Well, yeah, and
or
so
perhaps the prequels.
Are you comparing the Ewoks to all those cops coming out of the subway?
I am very much.
That's kind of the way it
I had a
was.
similar feel.
Yeah.
All I needed was a furry suit, and they were. I was like, wow, this is very reminiscent of another movie I've seen.
I did notice there was an Officer Wicket.
I think about 5 of our listeners will get that. As we move on to a lot of scintillating names in the odd block today, listeners, we're going to wrap things up with Hess Corp. Ticker symbol, surprisingly, HES. This one actually having a little bit of underlying activity today, off about $1.50 or so, or a little over 3%. This is the name that does about 6,700 contracts a day, doing about 4x, doing about 24, nearly 25,000 out there today. And what caught our eye out here was more paper out here in good old the April expiration cycle. In particular, the April 35 puts were the strike du jour today, going up fairly decent size. When we started watching this morning, actually, it was about, a little over 15,000 with about one block of nearly 10,000 going up, with the rest kind of going up scattered throughout the day. Initial kind going up at about 110, tied to stock. The other kind, I don't have all the prints on those. So it seems like open interest, only 1,500 contracts. So clearly this is some opening paper. Mr. Greasy Meatball, take us home here with puts in stock in good old Hess Corp. And does that trade come with a nice little Hess truck toy that you can bring home for the holidays?
That trade was done delta neutral. It was primarily an income volatility trade. Maybe the guy was just replacing some long position with some short puts. Clearly doesn't think a lot's going to happen, and he got piggybacked big time, because once people saw those April 35 puts go up, they jumped in and sold a bunch more of those. So they were a quite popular sale, and if maybe that put sale is a sign that Hess management is finally going to get fired. There's one of the worst run buyback programs in the history of mankind. This is going to take me in a diatribe. They bought $5 billion of their stock above $80, and then just did a secondary offering at $39 a share. That CFO is still working for Hess. He should be fired. The C-suite, the entire C-suite should be fired, and really most of the board should be fired, because that share repurchase is just insulting. And I think this is going to be the second time in the last decade where we've seen, first with the financials and now with the energy companies, when you see companies deciding to buy back their stock instead of investing or handing out a dividend, especially when the stock has been climbing, that is a great sign to GTF and get the frick out. All right, because try and find me a great example of well-executed stock buybacks. Closest thing I can find to a decent stock buyback is the Alex Jacobson special, Amazon, where they actually said, hey, our stock's been pounded, let's buy some of our stock. Meanwhile, you got the entire energy sector saying, boy, we're off 30%, we're not buying any more of our shares. Great work, guys. And then prior to that, you saw Bank of America, Citigroup, all those guys were doing that in the mid-2000s, and we saw how that all worked out. Stock buybacks are quite possibly the worst thing that a board can really decide to do long term. As opposed, the only reason why they still exist is because of I think double taxation of dividends, and I'd like to see that change. Because I'll tell you, IBM investors would probably rather have the dividend than IBM owning the stock for $200. ExxonMobil customers would probably rather have paid the tax and the dividend than have Exxon owning its shares for $105 a share. CVX, same thing, and I bet you Hess Oil wish they had the cash in hand and paid the tax rather than resold their share at a 50% haircut.
Should we mention the Options Express dividend right before? Never mind.
Oh, hey.
But that was a good thing.
That was a good thing. That
one worked out pretty well.
Special dividends and dividends are great. It's these buybacks that I think are really, really dangerous, especially when a company is doing especially juicy.
I forgot to mention this episode also brought to you by Hess. So we have lots of angry sponsors for this episode. And the old OX dividend, that was a good one, of course. It made my life fun because we had so many questions about what's going on with these strikes and how come
what's the deal with the special dividend?
Why?
You know what? I think what is the deal with that? Because Ameritrade did the same thing when they merged with TD. Didn't they have like a special $5 dividend in like 2006, right before they got picked off?
I don't remember that one.
Well, I think
with
OX, I think what they were trying to do is they had such a big pile of cash that they wanted to just get the cash to the shareholders because I think they knew that.
And they knew they were going to get bought for they were going to get sold for the bid.
Yeah, actually,
that was my speculation. I don't know.
It was clearly to provide liquidity to the shareholders, but OX actually went out and borrowed some of that money to provide liquidity to the shareholders. You got to remember at OX, and to your point, at Ameritrade, very concentrated ownership versus who they were now. I mean, much of OX stock was in the hands of just a couple families, and that's part of what drove the Schwab deal was they wanted liquidity.
You need to finance, 900 guitars. It's important.
Before we offend anyone else, we'll keep on rolling.
Let me just make a point. Not one of the two families I was referring to.
Anything to add?
No, I'm kidding. That was a joke.
Anything to add on the odd block there, Mr. Rock Lobster, before we roll along?
All I know is it's much more exciting when Mark does it.
I just filled every word I could with just gasoline, and then you should see the fire behind me. It's like the end of an action movie. I'm like Schwarzenegger when in Terminator 2 when the guy's frozen from the liquid nitrogen.
I'm still trying to get the ketchup off my lobster.
Hasta la lobster, baby.
Hey, we offending Mainers, offending pretty much left, right, and central here on the show as we keep rolling.
Don't
along.
forget us St. Charles people at the beginning of the show.
Well, they got some love with their brochure.
I'm sorry, that was a brilliant bit.
They got some love with that brochure here, so we sent another visitor to St. Charles, I think, today, so that makes it 3 for the year.
I'm claiming umbrage on behalf of my entire city.
only the Rock Lobster can claim umbrage. Before we get more umbrage, let's keep on rolling. It's our 500th episode spectacular. It wouldn't be anything without the listeners. I want to make sure you guys get some time on the show as well. We're running a little long, but I think we can fit it for the 500th episode. So without further ado, let's do a nice little 500th mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to join us with your questions, your comments, anything. Mr. Rocklops, I know you have to run in a little bit. Any last thoughts you want to leave us with before you have to hop off here on this 500th episode Palooza? Too bad we couldn't have you in studio here for adult beverages and pizza and all sorts of other fun stuff. But you can follow along at the home, playing the home game. Any last thoughts before you hop off, sir?
Just look for more exciting stuff from the option block. I think there will be more interactive stuff to come.
Yeah, this is just the beginning. We're kind of, like I said, we are still working out the kinks here in our brand new setup and making sure all the tech works and the cables and everything else. Make sure everything works at once is always a fun challenge. But it seems like it's working pretty well. We're getting some good feedback on it already. So I think we'll be doing this more for this program and for other shows to come. So that's pretty exciting. So one thing we've been getting since day one, hey, can you stream it? I can't tune in certain times. Can you stream it? And so we're trying to make that happen for you guys. All right, thank you, Mr. Rock Lobster. Now go forth and prosper with all your crazies over there in the pit chat as we start answering some of our own questions from our own crazies. Starting off with frequent writer inner here, Tennis Great. He writes, "Hey, Option Block. I've been hearing a lot recently about gamma scalping. I'm not sure what he's hearing. Not listening to us. We haven't talked about gamma scalping in a while. So he's cheating on us with other programs. How does it work, and who should use it? And is this second order Greek becoming the new options darling? I love the show." Well, Mr. Second order Greeks, people have them on the brain these days. I'm getting so many questions about these. He's obviously referring to our big discussions we've had recently on this program on Options Boot Camp and others about second order Greeks. Gamma kind of being the stealth second order Greek. No one thinks about it in those terms, but it really kind of is because it talks about
second order Greeks is actually what we call the guys we kicked out of the fraternity.
And looking here, let's see. Let's take them in order. Gamma scalping. We mentioned this before on the show. It's kind of a challenge for retail. I wish I could have John come in and weigh in on this to see how many retail clients you guys actually have over there actually doing any gamma scalping over there at OX. I think that'd be an interesting little factoid to have here on the show. But we talked about it before. It requires a lot of margin, a lot of free capital in your account, a lot of wherewithal on the underlying as well to obviously work those orders and get those scalps in. That was obviously the way a lot of us on the floor used to survive any long premium positions we had. I know Mark, this doesn't apply to him because he never was long premium once in his life. The man was just dark side all day long. But a few of us else had to survive some long premium every now and then, and gamma scalping was the way we would do it, of course, working our orders above and below and trying to scalp the stock. It sounds pretty rudimentary, but that's pretty much what it is, and that's how a lot of market makers survived for those dry periods when nothing else was going on before, you went and met Mark at Series around 10:30 a.m. to begin your the actual work day that he had going on over there.
All right.
I used to always walk by that place.
I always waited until the European closed before I started drinking.
I knew certain guys I would see there, and if I saw them there around 10:30, I'd just say to them, "You're hung, aren't you?" They'd say, "Yeah." And I'd say, "Okay, there you go. Enjoy the rest of your day here," because they're just waiting for their deltas to come back for them. How does it work, and who should use it? We kind of hit on it a little bit. I don't know, Alex. You haven't been on in a while. We haven't talked about gamma scalping in a while. How much utility really is there? And this is pretty much a professional technique. It needs capital, it needs sophistication. How much utility for retail really is there when it comes to trying to scalp gamma? I mean, it's a laudable goal, but how practical really is it for retail to try to do this?
There's no retail practicality in it. First of all, you've got to put on a delta, to your point, you put it on a delta neutral position. And to do that economically, you're not buying 500 shares of stock and selling 10 at the money calls. I mean, you can do that. That'll get you delta neutral. But the transactions costs are going to eat you alive. So there's no retail practicality in it. If you can trade size and bring your costs down, which means the easiest way to bring your costs down is to do it in equities, and then you miss liquidity. So it's not, in my view, a retail transaction.
Tosaw, have you ever scalped gamma once in your life, sir?
Once.
Just that's once. That one
I don't
time.
even know if you'd call this a gamma
That was
scalp.
enough for you, huh?
And then he met his wife, and the world changed.
Right.
I got better things to do with my day.
No, it's just like Alex said. I think just with commission costs, it's something to where you really aren't able to do it on the retail level. If you can buy at the bid and sell at the ask, like you gentlemen used to be able to do back in the day, then it's something that can be done. But on the retail side of it, where you're hoping to get filled at the midpoint of a bid-ask spread, you have to pay a commission. I really don't see it working.
So I'll give you kind of the retail way to gamma scalp. And it's not really gamma scalping, but it's kind of the poor man's gamma scalp. So in our strategy letter a couple weeks ago, we put on a TLT butterfly. Long the thorax, short the wings. Skew was a little steep, vol was too low. And I'm looking and I'm saying, rates are moving around. Why is vol so low in TLT? So lo and behold, we buy the 28 straddle and sell the 33 calls and the 23 puts against that straddle. Well, lo and behold, TLT rallies over the next couple of days, right? Rallies to 31, we dump some of our call spreads. Rallies to 33, we dump the balance of the call spreads. So we now own the put spread for what amounts to free, then the underlying drops. we sell out of the put spread at 40 cents and make our money in that way. So that's kind of like a poor man's version.
And that's over several days, though.
Yeah, because
you guys would do it typically in the same day.
Yeah,
most
yeah.
of the time.
You do it all day, every day, any day.
Yeah.
But you can gamma scalp in that respect over time. You can also do, if you're long and straddle, do things like selling diagonals around it. Forward stuff just to harvest some decay, but that's not true gamma scalping.
Yeah, and to your point, Mark, the vol was low, and you got a lucky move. It went up and then went down. Mm-hmm. So in a lot of sense, it's not pure gamma scalping.
In no sense is it pure gamma scalping.
Right, and you got to do some size, and you got to have some capital. And if you're a retail customer, you're not going to get a haircut on delta neutral. So it's cumbersome. It's hard to do. I do, however, want to go off topic for a second, which I know is kind of strange.
Shocking. Unheralded, sir.
I was at a SIBO event last week, actually the SIBO volatility event. And
the one at the one...
the Bloomberg SIBO event.
Yeah.
And Matt Moran, who runs institutional marketing at SIBO, came over to me and said, so you've worked at multiple exchanges, you've worked at brokerage houses. What is the most common income trade? And I said, covered writing. And he said, nope. So he said, we just did a study with a couple of the firms, and the most common income trade, and when, I'll lay this out and you'll see why, in terms of volume done, is the iron condor. Matt Moran said it's the iron condor. And I looked at him and went, I don't buy it, Matt. And I said, did you just look at SPX?
No, you actually sell iron condors. You don't buy them.
Weren't you leaving?
No, I'm not. That's Andrew.
I said, what kind of data? And he says, we're going to release a study on it. You'll see the data. But that is the most common income trade. The interesting thing is I was always taught about half the volume. I say being taught doesn't make it so, but half the volume in the option business is some type of market neutral income trade. Cover writing, selling puts, selling spreads, buying in the money spreads. But Matt kind of popped this at me, and I say we've been competitors at one point. He does that from time to time, and he said, nope, we're going to show you a study that shows the most common income trade is the iron condor, and I'm probably in trouble now for front-running Matt's release of the study. But
that's surprising to me. I was probably surprising to all of us. If you had told me that like maybe 3 or 4 years ago, I maybe would have believed it more, because that's when iron condors seemed like they were
golden
really
age
hot.
of the condor.
I'll be very interested to read the how they came across this.
It was
and where they're pulling.
It was the India VIX, and it was a period of April to March.
It was the Condor Trader Society of America, the CSA. And I'll be very interested to see the data on that, because I would have thought it'd been call overwriting, and it would, because I think about this, maybe they leg into it, but when I was a floor trader for about a decade, in single stock equities primarily. I also dealt in the index products, and in single stock equities across all 300 stocks I traded. In one block, on one trade, I think I traded an iron condor once. That was actually structured as an iron condor.
I was just thinking to myself, I stood in Intel.
Maybe call spreads and put spreads a lot that they would lay into.
SPX is a different beast, but when I stood in Intel for at least 2 or 3 years, and every day, all day long, 90% of the flow is covered calls.
Yeah,
and
or
maybe on one hand, the number of flies we did,
maybe
over 3 years. So, I'm looking forward to seeing the data.
So
we'll have grist to discuss on future shows.
Yeah, keep this in mind. Transactions costs have changed, and there's COPs now. So even if the order isn't resting there, the fact that you can trade spreads as spreads easily today, although that's been around for a while. But I was as shocked as you were, and when Matt sprung the statistic on me, I was as disbelieving as anyone. But
there are like 9,000 guys named Matt Moran in the option business. I can name at least 10.
Oh, he was talking to the crazy one. That's what it was. It was that other guy that no one believed.
Like the Minions.
Yeah.
No, but Matt, he's not known for throwing out things without having data to back it up. So I'll be curious to see the data.
I agree. But Matt Moran's are kind of
just nod your head if that goes along with the flow you're seeing there at Options Express on any given day. Yeah. You can't see what he's doing. I won't. For compliance sake, I won't say if he nodded his head in agreement or not.
Matt Moran's are kind of like the George Foreman of the option industry.
They're all named George.
They're all
kids.
named George.
I was going to have some other questions, but we kind of went into that one for a while.
Yeah, it was a good one.
That was a good one, though. So I think we'll save some other ones for our next episode so we can keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. As you can see, we're still debating the merits of the Iron Condors here on the old show, but it is time for not the odd block. That would be happening already. Of course, it is time for Around the Block, the portion of the show where we tell you what we're watching for the rest of this week into the old weekend. Kind of been a weird one. It seemed like the Bulls were back in force for quite some time now today. A little bit of an easing up of that. So maybe perhaps we'll turn to our resident Bull to see if he's feeling the love right now. Uncle Mike, it's kind of been an interesting week. What are you watching for the rest of this week into the weekend? And are you feeling the bullish love right now or not so much?
He's our resident Bill, not our resident Bull. Get it?
Man,
I think he's been a bull.
Is on a roll today.
He's a bull longer. He's been a Bill. I mean, one was like 3 months. One was like a decade plus. So we got to make him a bull now.
Well, I've been a Bill even since I wasn't a Bill, I guess, but nonetheless, because I still believe.
Once a Bill, always a Bill.
Well, he makes Bills being a bull as a former Bill.
There you go.
Man, you were on a roll.
I like it. Now, can you pay my bills?
I think that's a bunch of bull.
Did I bring this out to you? Is the fact that I'm back here?
I don't know.
Has that been a catalyst?
I am super sharp.
I think a few beers brought it out in him. Speaking of Bills, he'll be paying the tab for everyone here today, so that'll be nice
there
for
you go.
Here. Go ahead, Uncle Mike.
No, I think that when we've had the 3-day run that we've had over the course of this week, I have a hard time. I don't think we're going to get too much continuation. Tomorrow, it's Thursday right now. Well, we're live, so everyone knows it's Thursday. But tomorrow, I think we'll get, I don't see a lot of movement happening tomorrow in the marketplace. But next week, it wouldn't surprise me if we pulled back a little bit. But I still remain in my stance that I've always had on this show when we're negative on the year. I would urge everyone to be very cautious like we are right now. I am long-term bullish, but I have always said I am short-term cautious, and we are negative on the year right now. So I would recommend that you have hedges in place, stop losses in place, and just be prepared for another downturn because never fear the market, always respect the market, and the market is down right now still on the year, so we need to be respectful of that. And with that, hopefully next year, the other thing I'm looking forward to, I hope, is that the Mike Tosaw curse on the Buffalo Bills is lifted because ever since they cut me, they haven't made the playoffs. They were a perennial playoff team, but...
That's what you get, Buffalo Bills.
There you go.
But I am a fan. I'm with them. So I'm hoping
right.
that the Mike Tosaw curse leaves them next year.
Maybe if they can find a better quarterback than E.J. Manuel, they'll be okay.
Should mention here we are out of the mail block with some people chatting in our chat. Thanks for sticking with us, by the way, for the early feedback. I know it was a little painful, but we fixed it all for you now. Options Queen saying he or she, I'm guessing she, loves the show. Congrats on the 500th episode. You know, we reach all. Mark was talking about the Hallstead Pickle District before, so we reach all audiences here. We're not discriminatory. We like them all.
The Queen writes for SIBO. She's in the Options Hub.
There we go.
If it's the same.
Oh, maybe it's the same one. Well, thanks for the love there, Options Queen. For everybody else there in the chat room, want to make sure you get some. We're looking forward to more live episodes coming. But speaking of which, Mr. Viceroy, we'll go around the table, around the horn here. What's catching your eye? What are you watching for the rest of this week into the weekend?
So, don't really have a lot of strong opinions, but one thing I've learned now, being on the cash side for a little bit, is these markets are really thin.
Yes.
So be very cautious about liquidity. And you look at the market and it's down 80 Dow points at 2 o'clock and it's down, 400 Dow points at 3, or it's up 200. Markets are thin. Everything we've talked about in terms of exchanges, there isn't a ton of liquidity out there. We can make light of Citadel and Goldman, but essentially liquidity disappears when vol perks up, and it's all exchanges, and I think a lot of it is the concern of getting front run and spoofed. So I would be very careful here. And, tomorrow's an expiration. If you've got a position that's a few cents out of the money at the opening tomorrow, a short position, cover it, don't play the game. Because with the lack of liquidity in the market, and I don't know how long this will last, but it's been there for a while. Be especially cautious. And short positions going into expiration week, have a plan, have a plan, have a plan.
Mr. Greasy Meatball, same question for you, sir. What's catching your eye? You mentioned Vicks Contango. It's been a while since we said that.
Been a while.
I think we'll get into that a little more on volumes tomorrow, but what else is catching your eye out there this week?
As I said at the top of the show, I think things are looking a little toppy here. We're stuck in a range. This rally has been relatively light. In a kind of rough market, you expect rallies to be sharp, low volume, and short-lived. Per Mike's discussion, I do agree. I don't think this is an end-of-the-world 2008 scenario. It feels like a 2011. I was sitting down with one of my friends that went to cash, and I said, well, why don't you just sell some wide put spreads? And that way in SPY, in your IRA, why not sell next time we sell off, why not sell the 75-60 put spread 3 months out and either collect the premium or take delivery with what amounts to a protected bottom if things really do get bad. I like owning the market anywhere near 1,800, and I think we're probably heading back toward 1,800, maybe 1,750. As I look at oil vol, when we were talking on Friday, got up to over 85. It's now back below 70. Oil's going to go lower, but vol is not. I think that the OIV, OVX vol spike ship has sailed, and we're now in the November 2008 of oil, where we've seen the vol peak. It may go lower, but it will be followed by lower volatility, and as such, I like selling just about any type of vol premium you can get out of USO or WTI.
Yeah, it's been so busy this show, we haven't even had a chance to discuss oil, which has been rocking and rolling this week as well. We'll have to save that, though, for the next episode.
I brought some for after the show.
We're going down a slippery slope with that one.
An oiled up slope?
I'm going to mute your microphones before we get too punny here, listeners. That music means it's time, unfortunately, to bring this 500th episode Palooza to a close. I want to thank everyone who joined us here in the room live, as well as all you guys beaming in from all over the place. I think we got all the kinks worked out, so I'm looking forward to doing a lot more of these live in the near future. But before we go, as always, let's do one last trip around the roaring horn here. See what everyone's cooking that may interest you. Alex, you haven't been on in a while, so we'll start with you. A lot cooking in your neck of the woods. I'm not sure how much you can talk about, but a lot of all eyes are on Chi-X these days. That said, what should we keep an eye on for in your neck of the woods, sir?
Chi-X Snap. It's the block auction liquidity product. Should come to market, assuming SEC approval, early April, mid-April. It's going to change the definition of what an exchange is. It's going to blend both a lit exchange and a dark exchange in one order. So keep an eye out. Should be here early April. It is an institutional product. So it's for folks who can trade some size. It's $250,000 notional, but that's cash markets, not the options market. But it should be interesting.
What are you doing? I'm going for chicks, man.
I can't have people tell me.
Chi-X, you gotta call it. You gotta trade with chicks.
You know, the funny thing about this is the first couple weeks after I left Options Express Schwab, I was working on an assignment in the Board of Trade building.
Okay.
And every time I walked into the Board of Trade building, there you were, and I'm in a coat and tie, and you know I look like Eddie Haskell, and Mark is always saying, "What are you doing?" I said, "Can't talk about it. Can't talk about it."
Hey, Alex, what's up? What are you doing? Can't talk. Come on, Alex.
Yeah.
Come on.
And the thing is, I was only in the Board of Trade building 1 or 2 days a week, and I was convinced Mark
was stalking you. He told me later.
Was stalking me.
I was more stalking the Stiff Drinks series, but close enough.
There had to have been 5 or 6 instances where I walked in the building and you were standing there, and I was like, a couple times you had tour groups, but it was like, what are you doing? In fact, we traded a text message, and I said, can't tell you.
You've been around long enough to know, Alex, that was no accident, sir. That was pre-planned meditation on his part. Let's turn our attention now to the great folks out there in St. Charles. In addition to your upcoming tourist initiative, Uncle Mike, what's cooking in the land of RCM Wealth Advisors.
You know, it's been 500 episodes of this show, and I want to just use my time slot today just to give a very heartfelt thanks to our audience. 5 years ago, this show began, and just from a personal level, this show has really meant a lot to me in that I remember when we had the tornadoes in Joplin, we were able to solicit donations from our beloved audience to help the people in Joplin, my college hometown. I remember with my wife almost passing away a few years ago, all the thoughts and prayers and emails that I got on this show, and all of us have benefited from a business standpoint in this show in some way, shape, or form, and well, a lot of ways. But just in general, this show has meant a lot to me, and I know it's meant a lot to everybody in this room today, and that's why we're here. So 500 more, folks. Thank you very much for letting us do this.
Yeah, well said, sir. That's why we're going live. We want to be able to interact with them that much faster and quicker and get their questions and stuff. So I'm really looking forward to that being a new iteration for the next 500 episodes, 5 years from now. Crazy town. All right, take us home. I'm kind of scared to close with the meatball, but Mr. Greasy Meatball, what's cooking in the land of Carmen Line and or the Pit?
Well, we're going to be going to the Durant House Museum, located on Dean Street in St. Charles. It's an authentically restored, furnished 1843 prairie farmhouse.
Is that where you hold your boot camp?
Custom docents. Prairie children bring the past to life. Beckons visitors of all ages, interest to enjoy the unforgettable trip back in time. Special events year-round.
There you go. Great place for some education.
For my St. Charles people in the audience, I am going to pound this guy's skull after the show. I promise you.
We're going to be doing a beginner boot camp starting next Wednesday. So if you're new to options, so let's say level 1, 2, or 3 out of 10, this is the class for you. Go to optionpit.com/begin camp, and if Mike's going to thank our listeners, I want to thank Mark Longo for spending all the time and effort and throwing this together and putting together the show. He's been
I'll allow it.
He's been a hell of a producer and a serviceable host, and where would we be without that amazing mock turtleneck that is Mark
no
Longo.
mock turtleneck today for you, sir.
He's wearing the
button down.
Straight up
button up. So
going fancy.
Just a thanks for putting this all together and for being here for 500 and for the next 500 shows of the Option Block.
Well, I appreciate that.
When we'll be recording this in 2021
in our walkers.
Right.
But it has been quite the epic journey from the first germ of an idea of this show all the way through to 500 plus episodes. Now many iterations, many ideas, many co-hosts later. It's still rocking and rolling. It still has a clear niche in the audience. People have come to like it. People have come to look forward to the show. Hopefully, we'll be able to really rethink the way they consume the show going forward, because we've tried in the past to have some live people come on the Skype call and things, but that's always been challenging. To have some live in-person audiences we've had too, that's always been fun. But now we can actually get them to tune in with us Mondays and Thursdays at 3 p.m. So it sounds like, listeners, this is going to be a thing for the future. So if you want to get the live dose, see how the sausage is made behind the scenes, tune in Monday and Thursday, 3 p.m. Central, right here. We tweet out the link. We'll put it on our website as well for our Mixlr chat page. You can chat live with us here right via the Mixlr app as well. You can do it on your Android or iPad or wherever else you have. So we're always looking forward for new ways to interact with you guys. And as Tosaw said and as Mark said, being 500 episodes in, we really do it for you guys. You're the reason we've been doing this for 5+ years, and hopefully, who knows, for many more years to come. And on behalf of the Greasy Meatball and Uncle Mike and, of course, the Viceroy, and even myself, I want to thank all of you out there in the listening audience. Oh, I forgot the Rock Lobster for him as well. I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing to the show, and, of course, for joining us live today. This was really fun. Looking forward to more of these, and we'll see you next time right here on the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.